Lesson 7. Identifying key levels, support and resistance. Remember, history tends to repeat itself. So the basics of support and resistance levels. So if we know history tends to repeat itself, it can be assumed that a certain price is going to be supported or resisted by market participants, both from the psychological standpoint and from a fundamental standpoint. Who wants to sell something that's too cheap? On the flip side, who wants to buy something that's overpriced? In a chart, we can see where these key levels of support and resistance are. So if we take a look at this chart here of the S&P 500, this is the daily chart again. It spans back from October 2021 and goes toward today in June of 2022. We can see that at certain areas, like here, price action tends to get, number one, a lot of volume, and number two, tends to stay around the same area. We can then assume that around this area is heavy support and heavy resistance. We can draw horizontal lines to depict support and resistance. And as history tends to repeat itself, we have some support and resistance levels in here, and then again in here, and we are currently working around the support and resistance levels as we breach a little bit higher into 415 again, if we do end on 415 today as we did yesterday and much of this past week. We're kind of ebbing and flowing in this area here, establishing more support or resistance for future days. As we can see here, a break of resistance, meaning that price is trying to go higher, usually means that the last resistance point becomes support, and support becomes retested, bounces through this area here, and it breaks through another level of resistance, and then that same level of new resistance becomes support. On the flip side, in a downward trending market or a bear market, the support, as it breaks, becomes resistance, and as it bounces through, breaks through another level of support, that support again becomes resistance. Shown through a much larger, longer pattern, we can see here as it ebbs and flows here, breaks through the resistance. That resistance now becomes support and helps it break through a new level of resistance. We can take a look again to see our lines. Right now the price is at 411.43, and if we look in the past, this level is quite key as it has been a launching point, but also now has become a falling point. So the battle here will give us clarity into the next coming weeks as to where price is going to go. Will we break through some of these resistance points up here to establish new support, or will this become a resistance and we have to work harder, meaning price action, volume will have to come in to push price up higher in order to create the new level of support instead of it becoming resistance. And this is all based on the premises of history repeats itself, as these levels are historical, and also as round numbers tend to become more mind imprinting, they can also be very psychological. 400, for example, 425, 450. Up here, we got up to about 480. So 480 is a key psychological level for many people. And if we hit 480 again and reject hard like we did here, then potentially it will be a solid form of resistance. Conversely, if we hit that position again like we did here at around 450, we reject hard, come back, and then we blow past it with volume and authority. We can see that that became support again here and here, and until becoming furthermore resistance as it touches again around this area. All right, I hope that helps you with establishing support and resistance levels, as support and resistance levels are important even within a trend. So in the last lesson, we talked about trends. Trends can also have support and resistance lines as well. Let's take a look at how that can be talked about. So if we were to draw a trend line, just like so, and then draw another trend line, we kind of create what's called a channel. Now this channel is a megaphone channel, which is a terrible channel to try and draw and make assumptions on. So I'm going to go ahead and take some liberties into not knowing the future. I'm going to grab this line here, and I'm going to say that we are using this area here as a channel. Right about there. And normally channels are parallel. And that's as parallel as I can get it on just using my eye here, but as you can see, it ebbs and flows in this channel, kind of like a support and resistance channel, the upper level being resistance and this level being support. And as you can see, as it broke through this trend line somewhat became a place of price action, of support or resistance, until finally it broke. We tried to come up to that bottom of the channel and rejected hard. So this is how, even with a trend line in a non-horizontal support or resistance line, can actually be support and resistance based on current trending processes or mindsets. Remember, number 2 in our principles of technical analysis, markets move in trends. So it can be assumed that this non-horizontal kind of upward trend can have its own support and resistances based on the trend line. And as you can see here, as we hit resistance level of this trend line, we reject it, but we are still moving upwards toward and along this upward trend line as being a pretty strong supported line for resistance. And then when it broke, it had to retest, broke again, tried to come back up to that trend line, and rejected hard. Now this doesn't always happen, but just to give you an idea, I did not pre-make this chart at all. I just came into it thinking that it should manifest itself somewhere because the market tends to repeat itself. The market moves in trends, and all the information is in the charts.